You're watching Business Incorporated live on Channels Television. Coming up in the next 25 minutes. Central Bank of Nigeria, MPC, meets today to decide Nigeria's monetary policy rate. First one for the Tinubu administration. And wheat climbs to 5-month highs. Russia intensifies attacks on Ukraine ports. And in Kenya, interbank lending rate hits a 55-month high on tight cash. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening with the market, starting on the African continent there. See the NGX looking not so bad, 0.02%, 65,278 points there. Marginal increase, but still in the green at intraday. If you look at South Africa, that's up about 0.61%. Convincing move there up for South Africa. Other markets we track, you see North Africa there, the EGX 30, that's down 0.35%. And we see Kenya again back down there, 0.34%. 110 points there for the all-share index, talking about the Kenya bourse there, still holding up to that 100-point level. Let's move on to the Middle East now. We'll see it's positive sentiment right there in the Middle East. Lone loser at intraday, the Abu Dhabi index, that's down 0.11%. In Dubai, we see it's at 4,011 points there. That's up 0.43% on the flip side. Other markets we track in the Middle East, we see Saudi Arabia and the Qatari index both firmly in the green at intraday. Wondering how this market is going to close at the end. We'll keep tracking all of those markets. But let's head on to the UK now. Let's take a look at what's happening there. We have Juliana standing by right there. Great to have you. Juliana, we have some company news now. We see Unilever, the company behind many popular consumer brands, including Marmite and Magnum ice creams, has revealed a surge in profit, but it seems to be getting the attention of the UK's competition regulator.
That's right. Good afternoon, Laddie. I have a new term for your vocabulary, and it's called greedflation. That's the accusation from market regulators in the UK when it comes to consumer goods companies like Unilever, but not just Unilever, Heinz too. But you're absolutely right. Let's go to their results first. No surprises that in the first quarter of this year, or the first half actually of this year, so from January to the end of June, they've reported extraordinary profits. Their profit margins have increased by about 10%. 3.6 billion pounds is what they've updated their investors with this morning. No surprises that they're one of the biggest risers on the UK blue chip index. Their shares rose by about 5%. And that really is one of the reasons why the Competition and Markets Authority in the UK are looking at consumer goods firms like Unilever because we're going through a cost of living crisis in the UK. Yes, it may have eased from the kind of 40-year highs CPI that we were seeing at the beginning of the year, but people are still struggling when it comes to buying some of their favorite goods in supermarkets, and that's exactly the business that Unilever are in. They've increased their prices by about 10% this year, and I think that's really been reflected in their underlying profits that they reported this morning. Now, this is a second phase of a probe from the Competition and Markets Authority. You'll remember, Laddie, we were discussing the fact that British ministers hauled supermarket bosses in front of the Privileges Committee, basically asking them what are they doing to ease some of the concerns from beleaguered consumers. Now, in their probe to supermarkets, they found that there was no wrongdoing, no profiteering of some sort. And I think that's because a couple of weeks before they were dragged in front of ministers, they all decided to invest billions of pounds in making sure some of the price cuts that they were receiving at warehouse level were trickling down to consumers. But now, as I was saying, and as you quite rightly said, the CMA are looking into consumer goods firms to make sure that they're doing the best they can, and that British shoppers are getting a raw deal when they're swiping out at the tills.
Right. So I'm going to definitely add that one now, greedflation at this point. But I remember with the oil companies, it was all about windfall tax. Don't tell me we're going to hear that for consumer goods companies too. Is that what we're going to hear next?
Perhaps, but Unilever have been making pretty extraordinary profits. And it's quite interesting, actually. Something I didn't pick up on is the fact that they are in serious trouble. I think they are one of the only big global firms that decided to not pull away from Russia at the height of the Ukrainian war. I believe Volodymyr Zelensky, the Ukrainian president, he's described them as pretty much evil. The fact that they are profiteering in Russia at a time where people are dying. So Unilever very much under pressure. Not only are they increasing prices in the UK, they're not going alongside their Western allies of pulling their brand out of Russia, and they're under investigation by the UK regulator.
Yeah, quite a lot of pressure for Unilever there. But we see Apple also has been sued for about £1 billion by UK app developers over its app store fees. I know that's been an issue for the longest time now.
Yeah, it's a pretty interesting class action lawsuit that was filed today at the High Court by a director of competition policy in the University of Anglia. This director is putting this class action lawsuit against Apple on behalf of over 1,500 app developers who are basically not happy with just how much commission the tech giant are charging apps to be in their app store. We know that Apple has a major monopoly on software. Of course, if you have an iPhone, you have an iPad, or you have an iPod, you are going to be using your app store. And for lots of developers, this is great. You know, you obviously are able to reach hundreds of millions of people across the world. But the issue is the commission. And in some circumstances, I believe Apple were charging up to 30%. And some say it's just too much, that they shouldn't be able to do this. I think there was a similar case brought a couple of years ago by Fortnite. And so it's a $1 billion lawsuit that's being filed against Apple. But then if you kind of scratch beneath the surface, Laddie, and you have a look at just how much Apple is making from its app store, first quarter of this year alone, it made over $3 billion US. $3 billion US is a lot of money, particularly if it's only coming from the App Store. None of its sales of any of it's good, and it is the only $3 trillion company in the world. So certainly they can afford it. And I think now, as you know, we've moved away from being locked down in the pandemic, and the way consumer choices were very skewed during that time. A lot of the time we were all obviously on Zoom. We're all obviously using as much online technology as we can. I think a lot of people that are working in the field are looking at the juggernauts and saying, okay, you need to pay your fair share and not exploit those who are at the bottom of the pile.
Yeah, I guess everyone's asking for a lot at this point. The developers also want their fair share right there in the App Store. But how are the markets looking in the UK? Any direction yet?
Yeah, I'm having a quick look at the markets now. Of course, it is earnings season. It's pretty quiet here in the UK at the moment. Of course, there are major wildfires going on in Europe, which is of course affecting the travel and tourism industry that's just recovered from the pandemic, and now they're going to have to pay millions upon millions of compensation to those who've had their holidays destroyed because of extreme temperatures. In fact, just before I came on air, Laddie, I did see some breaking news that there has actually been a plane crash in Greece. I do not know any more details on this. It's a pretty significant story. I believe this crash has come from a plane that was trying to prevent some of those flames from reaching a significant tourist area. So that's breaking news coming out of Europe, that there has been a plane crash. We're not sure whether or not that there are any casualties there. I presume, sadly, there will be. This is trickling down on the markets. It will much later in the week. But let's have a look at specifically the FTSE All-Share, the blue chip index. That's up by 0.05% at intraday. The FTSE 100, that's up by 0.09%. But the FTSE 250, the domestic market, that's trading down at intraday by 0.22%. In the currencies market, after a 9-day drop, there appears to be a rally of some sort of the British pound against the US dollar. It's currently trading up by 0.23%. £1 will get you $1.28 at intraday. The British pound is also trading up against the euro by 0.39%. 0.2%, and up against the Japanese yen by 0.16% at intraday.
Right. I guess the pound is making a comeback there. Thank you so much, Juliana. Always great to have your perspective. Thank you.
Thanks, Laddie.
All right, now let's head on to Europe now. Let's take a look at what's happening there. We see Eurozone economic activity that shrank at its fastest rate in 8 months in July. According to a key survey, economists are now bracing for a downturn in the months ahead as economic powerhouses as France and Germany saw about some steep downturns. For more now, have joining me Cassandra Sunt right there in Berlin. Great to have you, Cassandra. Tell us more about the results of the survey.
Thanks for having me. Yes, this is the HCOB Flash Eurozone Purchasing Managers Index, which is a bit of a mouthful, but it's designed to look at and estimate manufacturing output for a country. Because it's an index, a 50 or above estimates positive growth, where below means negative. So this most recent survey saw a big drop, the largest drop in 8 months, from a 49.9 reading to a 48.9. Analysts reading this survey say manufacturing continues to be the Achilles heel of the Eurozone, with producers having cut their output again at an accelerated pace in July. And the downturn seems to be fueled by dips in France and Germany. Here in Germany, the latest figures show a contraction as output dropped for the first time since January. That's on the back of a sharp decrease in factory output.
And this comes as a result of the central bank's eyeing additional rate hikes. What impacts could this have?
That's right. The European Central Bank is eyeing a further rate hike this week. This is all part of the quest to tame inflation, which did ease to 5.5% in June, but that's still well above the ECB target of 2%. It seems analysts are banking on another ECB rate hike on Thursday, even though the central bank is increasingly facing discontent among countries who fear that high interest rates will hurt growth. The ECB has been raising interest rates since last year. The ECB deposit rate, by the way, is now at its highest level since 2001. Now, after all, the Eurozone did enter a technical recession at the start of 2023, and growth is only forecasted to be around 1%. Meanwhile, the elephant in the room this week when it comes to rate hikes is the Federal Reserve in the U.S. The market is currently pricing in a 1/4 point hike, but there are expectations that there could be signals that this might be, big might there, the last key interest rate hike as part of this rate hiking strategy.
Right. All eyes on the U.S. Fed at this point. What's happening in markets in Europe today?
Well, this morning, European shares steadied near 5-week highs, with miners and luxury stocks in the lead. This comes after China pledged more support for its slowing economy. Overall, a mixed earnings report limited the upside, though. But big climbers included LVMH and Richemont, who rose more than 1% each. Both of those luxury stocks are heavily exposed to China. And Rémy Cointreau, the French spirits group, saw a 5% gain. They're counting on a sharp rebound in sales in the U.S. in the third quarter of this year. Meanwhile, Unilever climbed 5.1% after the consumer giant reported a better than underlying quarterly sales growth, which helped make up for higher costs.
Unilever right there in the news. Thank you so much. That's Cassandra Sunt right there in Berlin. All right, now let's head on to the U.S. now. See, U.S. stock futures were a little changed today after the Dow Jones Industrial Average registered its longest winning streak since February 2017. The Dow Jones Industrial Average futures there, see right there behind me, is now 0.02%. Marginal loss there in the futures market. S&P 500, that's up 0.07%. And we see the tech-heavy NASDAQ, 15,603 points, more dominating there, showing that's 0.27% up. So that might signal where the NASDAQ might close today when trading ends right there in the U.S. All right, we'll take a break now. When we come back, commodities market update is next. Do stay with us. All right, for noodle lovers, now we see the price of a 70-gram carton of noodles has increased by only 7.7% to about 4,200 naira this year. The price of rice, that's a substitute, has decreased by about 4.65%. Meanwhile, we see food inflation, that increased 25%. That was in June. Well, let's talk to Daniela Mubodede now, analyst, financial derivatives company. Great to have you on the show, Daniela.
Having me.
So tell me, why is the price of noodles rising much slower than the rate of increase in food inflation? And given the relationship between, rice and noodles, what is responsible for this?
Yes, so we've seen the price of a carton of noodles increase by just 7% compared to food inflation, which is currently at about 25%. One of the reasons for this is the market and competition for noodles. The noodles market in Nigeria is highly competitive. Aside Indomie, there are other noodle brands like Honeywell, Golden Penny, Dangote, Mimi, and all of that. So noodle manufacturers are quite reluctant to increase their prices so they don't lose their customers to these other competitors. And even if they do so, they do these strategically. And then some of the ingredients used in manufacturing noodles are imported. So noodles production is less subject to our domestic inflation rate in Nigeria, given the relationship between rice and noodles, which are said to be substitutes. If the price of rice decreases, it ought to exert a downward pressure on the price of a substitute, which in this case is noodles. So now that we have a decrease in the price of rice, and even if the price of noodles is increasing, there's no way it would increase as fast or even up to half the rate of food inflation in Nigeria.
And I guess that's why we like competition, in most of these markets. But we know wheat and palm oil are the major inputs used in production of noodles. This year, we've seen price of palm oil, that's increased about 19%. We've seen wheat, up 13%. We see with Russia there pulling out of the grain deal. Are we likely to see a knock-on effect, on the price of noodles?
Yes, so there is a high possibility of a knock-on effect of the global price of palm oil and wheat on the price of noodles. So because they are major inputs, so they'll have a direct impact. When manufacturers are faced with high cost of production due to the increase in the price of inputs, they're usually faced with two choices. So it's either they absorb this high cost of production and accept reduced profit margins, or they pass on these high prices to their consumers in form of high prices. So a surge in the global price of wheat and palm oil can lead to a fall in demand for noodles. That's if the surge is quite substantial. But then, aside from the magnitude of the increase in price, let's not forget that there are still other factors that affect the demand for commodities, such as consumer preference, consumer spending habits, and brand loyalty.
Right, and looking at other aspects now, see, instant noodles is mostly consumed by the younger generation. That constitutes about 60% of Nigeria's population. But despite the rise in price of noodles there, we still see that the demand remains at this point. But do you think that demand will continue if we see that price rise with that younger demographic that's the lover of noodles at this point?
Yes, the demand for noodles is still going to be stable, and it's probably even going to increase in the near term because noodles is very convenient. It's affordable compared to other commodities. It's available. You can find them in almost every retail outlet. They're very easy to make. They require very little cooking skills. Like in the span of how many minutes you've already been able to make noodles. That's why hence the term instant noodles. And also there's this changing lifestyle amongst youth. Some people find traditional cooking methods quite outdated. So everybody just wants to be on the move, make quick meals that they can easily eat and move on. So noodles is still going to be in the market. Like the demand for noodles is still going to be high in the near term and long run, probably.
Well, we'll keep tracking that. Everyone's watching wheat prices right now with all the disruptions we're seeing coming out from Russia and Ukraine. Thank you so much, Daniela Mubodede, analyst, financial derivatives company. Thank you.
Thank you.
And talking about Russia, Ukraine, there we see Chicago wheat futures. That rose to a 5-month high today, gaining about 2%. With Russia's attack on Ukrainian ports and grain infrastructure, that sparked concerns about long-term global supplies and food security. We see corn, that edged higher, while soybeans eased. The most active wheat contract on the Chicago Board of Trade, the WV1, that added 2%, about $7.72 for half a bushel in early trade, after earlier touching about $7.77, its strongest since February 21. And we see corn, CV1, it rose 0.1% at $5.69 a bushel, while soybeans, SV1, lost 0.1% to $14.23 for half a bushel. We see Russia destroyed Ukrainian grain warehouses in the Danube River in a drone attack. Was on Monday, targeting a vital export route for Kyiv, an expanding air campaign that Moscow began last week after quitting the Black Sea grain deal. And the Central Bank of Nigeria Monetary Policy Committee will give its first rate decision meeting today under the Tinubu leadership. Market participants and stakeholders are keenly observing the outcomes and statements from the committee, looking for signals of potential, policy shifts or continuity in the central bank's approach. Meanwhile, we see stakeholders there already giving their recommendations. One was from a manufacturer, Mr. George Onofowoka, CEO, Coleman Wires and Cables. His recommending a hold is the best move so that we can shift focus to solving micro issues right there. He was a guest on Business Morning earlier today. Take a listen.
Can we consider a stability in holding rates as of now? That is our own expectation as a manufacturer in the real sector, because you're already having the problems associated today with the increase of the MPC. So far, base rate moved up, interest rate moves up, commercial rate moves up, and the cost goes up. So invariably, it's ending up passing to the end user. And if the government wants stability, they're going to be a catch-22. You want savings. The whole point of increasing interest rate is to try and create more savings, is to try and create more investment, institutional investment, foreign direct monetary investment. We're using macro policies, which are the monetary policies, to try and fix both macro and micro policies. The micro policies are the physical policies, where the government needs to play hand and balance whatever monetary policy you're trying to do. When we look at it today, and when we look at the impact to the real sector, do we need more increases? I don't see it, because if you look at Treasury bill rates today, as of July the 12th, it's 5.94. So if the savings rate or the government Treasury bill investment rate is sitting at 1 year rate is sitting at 5.94, I don't see what the benefit of an increase would be. It's only going to be bottom line on the real sector that you're going to slow down even more the real sector growth. You're going to slow down the growth of each business because the cost of borrowing goes up, working capital capacity or capability actually reduces because they're actually looking at it in a different light.
All eyes on the MPC. We're supposed to get that decision later today, about 4 p.m. to 5. And we'll be covering it right here on Channels Television, so you can tune in at that time. And we get that rate decision meeting, the first one for the Tinubu administration. All right, that's the show today. Thank you so much for watching. Don't forget to join us again, same time tomorrow. You can watch us again on our YouTube channel. Just flip over to YouTube, search for Channels Television. You can click on videos. You can watch all our production. Thank you again for watching. I'm Ladi Williams. Bye for now.